Okay, class, we're about to start the exam 3 review, and we're going to start here with problem number 1. It says an investor bought 600 shares of a stock at $12.44 using a broker that charged a 2% commission. Find the amount of commission that was paid. So only thing we're doing here is finding commission. So for number 1, we would take our $12.44 a share and multiply by the 600 shares that we bought. When we multiply that out, that'll give us $7,464. Now remember, there's a 2% commission, so we will multiply this by 0.02. and that will give us $149.28. So that is your commission, the $149.28. Okay, problem number 2. It says the blank is the amount a borrower will pay interest on. It's the amount financed. The amount financed is the amount a borrower will pay interest on. So it's basically just the amount you borrowed. Whatever amount you borrowed, that's what you will pay interest on. That's basically what the amount financed is. I don't know why this is not focusing in good. Okay, yeah, that looks good. All right, number 3. It says for an $8,400 student loan, if you start school in August, graduate in May, that's 3 years and 9 months later, and payments begin 6 months after graduation, how much time will pass while interest is accruing? So let's take a look at this. So when you graduate in May, they tell you that that's 3 years, 9 months. But they say after you graduate, you get 6 additional months. So if we add 6 more months to this amount, this would be 3 years, 15 months. Now, first of all, we know that there are 12 months in a year. So we know we can subtract 12 months here, and we will add 1 year here. Because we're taking 12 from here. This will leave 3 months. And then we will add a year here, so this will leave you 4 years, 3 months. Okay, number 4. It says for a student loan, the daily interest amount is equal to, okay. So this is number 4. So it's basically the principal. Okay. Did you have a question, Ms. King?
What's up, babe? Over there, it ain't no big box. Please don't get expensive.
Yeah, I'll mute Ms. King. I think she made a mistake. I muted her, so she's fine. Okay, so we have the principal balance times, I didn't give myself enough room. So let me write it down here. Number 4 is the principal balance times the interest rate divided by 365.25 days. Now, we went over that before as far as why we had 365.25 days. This 0.25 accounts for the leap year that comes every 4 years. Because we know every 4, this times 4 will add an extra day. All right, so that's number 4. Now we go to number 5. It says the Elk Restaurant took out a loan for $7,000. The simple interest rate was 6.5%, and the term of the loan was 3 years. Find the interest, future value, and monthly payment. Okay. So they want us to find three different answers here. So if we look here at number 5, first they want us to find the interest. We know the interest is equal to principal times rate times time. So the principal here is 7,000. The rate is 0.065, which is 6.5%, and the time is 3 years. So when we multiply all of that out, that'll give us $1,365. That will be our interest. Now we want to find the future value. The future value, we know we use A here, which is A equals P times 1 plus R times T. So our principal is still 7,000. 1 plus our rate is 6.5%, which is 0.065. And then our time is 3 years. And then we have, actually these are supposed to be multiplied to each other. So now, after we multiply everything out here, this will give us $8,365. All right, now we're at, let's see, the third part. We want to know the monthly payment. Now we have to ask ourselves, this loan here, and I'll just put MP for monthly payment. This loan here, the future value of it is $8,365. We want to find out how much we would pay monthly. Remember, it's 3 years. So in 3 years, there are 36 months. So we would take the 8,365 and divide it by 36. And that would give us $232.36. And that will be your monthly payment. So this is your interest, the future value, your monthly payment. So those are the three answers for problem number 5. Okay, problem number 6. It says for a student loan, monthly interest amount equals the daily interest amount times the days in a month. And we will get to a problem similar to this, where we will use this, this monthly interest amount. Okay, number 7. It says the amount that an investor receives from the sale of a stock is called the blank and are equal to the amount of the sale minus the broker's commission. Okay, what I'm going to do for number 7, just to conserve some space, I'm going to write number 7 up here. The answer to number 7 is proceeds. So the answer to number 7, this is called the proceeds. Now, I'm going to make this 7 number 8, because number 8 takes a little bit more work. It says here, find the amount of interest earned. And then we have our principal, our rate, and then it's compounded semi-annually, and the time is 2 years. So they just want to know the interest earned. So first of all, we need to take the future value, which is principal times 1 plus R over N to the NT power. This is for compound interest. Now, once we get the future value, we're going to subtract the principal from that just to get the interest. So our principal here would be $1,950, and we will have 1 plus the rate is 0.135 when we change percent to a decimal, and the number of times that the N stands for the number of times interest is compounded. Since it's semi-annually, we'll put 2. Now, for our exponent, N we already said is 2, and then time is in years, and it's 2 years. So this here would become 1,950 times 1 plus 0.135 over 2 to the fourth power. And then we have the minus, I forgot to put the minus the principal, which is 1950. Now, once we put this in our calculator, this will give us $582.25. Okay, so that is number 8. Now we come here to the next page. We go here to number 9. It says number 9, consider the stock table below. Okay, I'm going to write number 9 up here because number 9 is very short. So we have A and we will have B. Okay, number 9, it says, what is the current price of the stock? The current price is located here, which is $87.29. Okay, B, what are shareholders trying to sell it currently asking for? So we will go for the ask price, which is $87.09. So that is it for number 9. Okay, now for number 10. Now number 10 is going to take a little work. So let's see. Let's just take a look here. I'm trying to see if I have enough room on this paper for us to do number 10. And I don't believe I do. So what I'm going to do, I'm going to skip number 10 and go to number 11. And then I'll come back and do number 10 when I have a fresh sheet of paper. So number 11, let's do number 11 right now. Okay, number 11 says find the missing value. If you notice here, we are missing the principal. We have the rate, the time, and the simple interest. We know the simple interest formula is principal times rate times time. So the interest is $6,492.50. The principal we don't know, but the rate will be 0.175 and the time will be 7 years. Okay, now when we multiply those two values, let me pull up this this calculator. So we will have 0.175.
On this waffle. It's already sweet.
And then we will multiply by 7. So on this side here, we'll have $6,492.50 is equal to 1.225 times P, because we don't know what the principal is yet. So now we will divide each side by 1.225. And we could put that in our calculator here. So we have $6,492.50 divided by 1.225. And that will give us $5,300 is equal to the principal. So that is number 11. Now, I believe, let me see. Number 12, it says find the amount of interest earned. Well, actually, yeah, we could do number 12. Okay, number 12. So if you notice here, we have a compound interest problem. So we know we're going to have to do the future value, which we basically did up here, minus the principal. So we could do P times 1 plus R over N to the NT minus the principal. So the principal here is $2,500 times 1 plus the rate will be 0.085 over the amount of times that it's compounded. It said annually, so we would do 1. Now we're taking it to the NT power. N is 1, and the time is 2 years, so it's 1 times 2, minus the principal, which is $2,500. So now, when we put this all in our calculator, this will give us $443.06. That would be the answer to number 12. Are there any questions? Okay. All right, so now we're going to go to a fresh sheet of paper. As I would tell you, I cannot use the back of the paper. Do you see this? This would not look good trying to write over that. So I have to use a fresh sheet every time. So now I know I didn't do number 10, but before I do number 10, let me do number 13 first. So I think 13 is a easier problem. So it says here, they said find the missing value. So a simple interest. We know interest is principal times rate times time. So we have our principal, which is $17,500. We have our rate, which is 0.115, and we have our time. It has 30 months, but we want to do it in years. So it'd be 30 over 12, because we know months is 12 months in a year, so we could take the months and divide it by 12, and that would give us what that is for a year. So now, once you put this in your calculator, it will give you $5,031.25. And that will be your simple interest for problem 13. Now, going back up here to number 10. I wanted to have enough space for number 10. So watch this. The first value we have here is $351.89. But let me read this. It says a credit card statement showed these transactions during June. So we see these transactions here. It says the credit card has an interest rate of 15% on the average daily balance. Find the average daily balance, the finance charge for the month, and the new balance on July 1st. And then it said, hint, remember that June has 30 days. So we start off on June 1st with $351.89. Now, if you look here, this balance stays there from June 1st, and then it changes on the 6th. So we account from June 1st to the 5th, that's 5 days. So we have to multiply this value by 5 days. So that would give us $1,759.45. Now, if you notice right below that, it says purchases of $67.46. So what we need to do is add these two values. So $351.89 plus the $67.46. Because remember, when you make a purchase, that increases your credit card balance. So that'll be $419.35. So now, on June 6th, your new balance would be $419.35. Now that goes from June 6th to basically the 11th, because we know the 12th it changes. So we count from the 6th to the 11th, and that's 6 days. Ms. King, do you have a question? Oh, okay, so now we multiply that. So when we multiply this, this will give us $2,516.10. Now, for the next day, June 12th, it says we made a payment of $70. So we would take the previous amount, this $419.35, and we would subtract 70 from it. So this will give us $349.35. Now we have to count how many days it is. It'll go basically from the 12th to the 20th. And if you add from the 12th to the 20th, that's 9 days. So we'll multiply that by 9, and that would give us $3,144.15. Now, on the 21st, it said we made another purchase of $141.87. So we would take this $349.35 and we would add the $141.87. Now, when we add that value, that'll give us $491.22. So it'll be $491.22 times. Now, the 21st would take us from the 21st to the 30th, and that would be 10 days. So we multiply this by 10, that would give us $4,912.20. Now, we're doing all this to find our average daily balance. So we will add all of these values together, and that will give us $12,331.90. Now, to find our average daily balance, and I will do this, I'll put ADB, average daily balance. We will take this value here, which is the $12,331.90, and divide it by 30 days. This is where that 30 days will come in handy. Okay, so when we divide this by 30 days, our average daily balance will be $411.06. Okay, now remember, that's just the first part of our answer. They also asked us to find a finance charge for the month. Now remember, the finance charge is based off of your average daily balance. So I'm going to put FC for finance charge. So the finance charge will be the $411.06 multiplied by, it says a rate of 15%, so it'd be times 0.15. So when we multiply that, that will give us $61.66. So this is our finance charge. Now, I'm going to circle this to let us know that these are our answers here. Now, the last thing that we have to find out is what our new balance would be on July 1st. So to find our new balance, and I'll put that as NB for new balance, we would take the last amount for the month, which is the $491.22, and add the finance charge to it, which is $61.66. So our new balance would equal to $552.82. So that is problem number 10. Okay, so now, are there any questions on this page before we go on to the next page? Okay. All right. So now we go on to problem 14. Now, let's take a look at 14. It says a house is purchased for $313,000 with a 15% down payment. All right. A mortgage is secured at 7% for 25 years. It says find the monthly payment. So this is what we would do. First of all, we need to know that monthly payment formula in addition to some other information. So first, let me write problem 14 here. The monthly payment formula is M is equal to the principal times the rate over N divided by 1 minus 1 plus the rate over N to the negative N times T power. That's the general formula for the monthly payment. Okay, so now we have that general formula. Now, first we need to find out what our principal is because we have our rate. Our rate is 7%. We have our time, which is 25 years. And we even have our N, which is how many payments we make. We know that we will make 12 payments in a year. The only thing we don't have here is our principal. Now, the reason why we don't have our principal is because the house is $313,000. But remember, this person put down a 15% down payment. So they actually lowered how much they would need to take the loan out for. So this is what you would do. If you paid the $313,000, that means that you would pay 100%. So since you're going to put 15% down, 100% minus 15% means that you're only going to borrow 85% of the value. So we would take this, I'll put this as DP for down payment. We'll take this 313,000 and multiply by 0.85, because that's how much you're actually going to pay. So let me pull this up. So we would take 313,000 and multiply by 0.85. So this would be $266,050. So that's how much your principal would be now. Now that we have our principal, we can substitute into this formula. So now we can have M is equal to, the principal is this $266,050. The rate is 7%, which is 0.07, over the number of times that you will make a payment, which would be 12, divided by 1 minus 1 plus, the rate is 0.07, and the n is 12, to the negative, in parentheses, n will be 12, and then the time, they tell us that it's 25 years. Now, if you look at this problem here, we know 12 times 25 is 300, and you can multiply that in your calculator. So this is really taken to the negative 300 power, just this parenthesis here. Now I'm going to show you all how to type this in your Desmos calculator. But before I do, I need to know, is there anyone that's going to be using the TI-84 calculator for this exam? Or TI-83 calculator? Okay. So if you're going to be using that, this is what I would suggest that you do. I'm trying to think. There is, okay. Just give me a second. Let me type this in this Desmos, and then I will see if I can pull up the TI-84 calculator, because I don't have it on this computer, so it's going to be a little challenging setting it up, but it'll be okay. All right, so let's go here. For our numerator, I put everything in a parenthesis. So we'll do an open parenthesis, $266,050 times. Then I would do another open parenthesis for the fraction, which would be 0.07 divided by 12. We'll move the arrow over and then do a double close parenthesis. So that took care of our numerator. Now we go here to our denominator. Same thing, put in parentheses. You have 1 minus parenthesis. Hold on, before I continue here, those of you that had a TI-84 calculator, you see everything that I typed in here, the parentheses, the division, and everything. Do you all know how to get to all of those buttons on your calculator?
Yep.
Okay, good. So everything that I've typed so far, this is what you would type in your TI-84 calculator as well. So everything that I've typed so far. And what I'm going to do is this. I think this will make it a little easier too. When I get to a part that's different from the TI-84 calculator and Desmos, then I will tell you when that part is different. But until I tell you that, What I'm typing in here is exactly what you would type in your TI-84 calculator. Does everyone follow that? That's doing a TI-84. Okay. So now we did our open parenthesis 1 minus an open parenthesis 1 plus. We'll do another open parenthesis 0.07 divided by 12. And we will close that parenthesis. Now, when we close this parenthesis here, that just took care of the fraction. But we know 1 plus and this fraction has to be in its own parenthesis. So we will hit another close parenthesis. So this parenthesis closes up this whole parenthesis here. Now, according to this formula, we have to take this parenthesis here to the negative 300 power. So we will hit our exponent key. Now, here's the difference. On your TI-84 or 83 calculator, it's that up character symbol. I believe it's, I think it's by the clear key. Okay. All right. Let me see if you can see this. Okay, this looks like your TI-84 calculator. For your exponent, you see the key right below the clear key. That up arrow key, that is your exponent key. So after this parenthesis here, you will press that key to do your exponent. And then you will type in the negative 300. Now, of course, on the TI-84, 83 calculator, your negative sign is right next to this decimal. I don't know if it's right next to the decimal. You do not hit the minus key for your negative sign in the TI-83 or 84 calculator. It's right next to that decimal key. And then now we will hit the right arrow and close that parenthesis. Now all parentheses have been closed. This will enclose the whole denominator of this fraction. So now our final answer here, this is our monthly payment. Our monthly payment would be $1,880.39. That is your monthly payment for problem number 14. Now, for those of you that are using Desmos or the TI-84 calculator, do not, and I repeat, do not get rid of this. When you type this in one time, leave it the same. Now, I do have a question here. Someone said they did the exact same thing I did on Desmos, and it gave them 0. Mr. Kelly, can you turn on your, I guess, camera and let me see it? Let me see your screen. Because there's no way it should have given you 0. Oh, okay, you found the problem. Okay, great. Okay, again, once you type this in the Desmos or into your TI-84 calculator, do not get rid of it. I'm going to show you how useful it is to leave this in your calculator. So now, we took care of problem number 14. Now we move on to problem 15. Problem 15, it says, calculate the amount of tax that our single person would pay on income of $99,286. So my suggestion here is to first look at single. The $99,286 falls in the 28% tax bracket. So knowing that, this is how we would start off. You would take the $9,075 and multiply it by 10%. So what you're doing is you're taking the highest rate here and multiplying it by 10%. So this is saying your first $9,075 will be taxed at 10%. Now it tells you here, up to $36,900 will be taxed at 15%. But what you have to do here is take this $36,900 and subtract out the $9,075 you already took out at the 10%. And then you multiply that by 15%. Okay, next. We have 89,350. That's at 25%. So we have 89,350, and we subtract the largest amount from the 15%. Because between these two, $36,900 was taxed between the 10 and 15%. So we have to take that out and multiply by the 25%. Now for the last portion of this, 99,286 is not the largest amount in the 28% tax bracket. So we still will write out that $99,286, and we will subtract the largest amount from the 25 percentile, which is $89,350. And then we will multiply that result by the 28%. Now, after you multiply and add everything up and subtract everything, your final answer here would be $20,975.83. That would be your final answer. That's how much tax is owed. Now, we go down here to problem 16. Problem 16, it says simple interest. We know simple interest is the principal times the rate times time. That's all they were looking for 16, part 1. And then part 2, the future value is the principal plus the interest. That's the future value, the principal plus the interest. So that answers part 1 and part 2 for the for problem 16. Now problem 17, they ask us to find the interest on an investment of $75,000 that pays 9.1% compounded weekly for 8 years. Now, because this is a compounded interest problem, we do not use simple interest. We have to use the compounded interest formula. But since they want us to just find the interest, we would take the future value, which is P times 1 plus R over N to the NT power, but we would have to subtract the principal off, because remember, we just want the interest. So the principal will be $75,000 times 1 plus the rate would be 0.091 divided by the number of times that interest is compounded. They said weekly. It's 52 weeks in a year. So it'd be divided by 52. And then N is the amount of times it's compounded times the amount of years, which is 8. And then minus the initial principal, which is $75,000. So now, after you put this in your calculator, your final answer here would be $80,221.30. That would be the interest that you will earn. All right. Now we move on to problem 18. Problem 18 says, what was the closing price of the stock the day before yesterday? Now, this is where it gets a little tricky. I got to expand this a little bit. Now, the closing price was the amount that happened yesterday. To get the amount that's the day before yesterday, we look at the net change. You have to do the opposite of the net change to find out what it was the previous day. This is yesterday. The net change added or subtracted to this is the day before yesterday. So with 18, we would take the $51.80 and we would look at the net change and we would take its opposite. So instead of subtracting $1.39, we would add $1.39 because that means the day before yesterday, it was $1.39 more. That's why you had to subtract $1.39. So now, this right here will give us $53.19. That's how much it was the day before yesterday. Now, number 19. Now, remember how I told you all for problem number 14, how to leave that in your calculator. Problem 19 is the problem that will show you the value in leaving it in your calculator. Now, with 19, it says a small restaurant was purchased for $456,000 with no down payment and a 6% loan for 10 years. Find the monthly payment. So the monthly payment we know is equal to principal times rate over the number of times that interest is compounded over 1 minus 1 plus the rate over n to the negative nt, the negative n times t. So now the principal is $456,000 because no down payment was put down. So it stayed $456,000. Now the rate is 6%, which is 0.06. The number of times that the loan is compounded is 12 because it's 12 months in a year and it's a monthly payment. So it's divided by 1 minus 1 plus, the rate is 0.06 all over 12, and then it's to the negative 12 times 10. Because it's the number of times compounded times the amount of years, which is 10. Now, this is where, let's pull that calculator up. Now you see here, all of these values, you only will have to change first the principal. Instead of typing all of this out, you have 456,000, and you do this the same way in your TI calculator. You just type over the value. So it'd be 456,000. You would change the 7% to 6% because the 12 will remain the same. So the 7% to 6%. And then here the negative 300, 12 times 10 is 120. So it'd be a negative 120. And then we will have our monthly payment of $5,062.53. That is your monthly payment. All right. Now, just to give you a quick little look here for those that are using the TI-84, I basically had, let's see if I could, okay, great. Okay, listen. To pull the problem back up, and this is one of the extra things you have to do in the 84, you have to press the second function key, which is here, and then enter. And then, oh, wait a minute, that didn't do it. Hold on. It's supposed to be second function, and then enter. Okay, give me 1 second. So I have to change this. Okay, now, remember I told you all don't change that problem here. So I want to show you how you would change the numbers in the TI calculator. You do not go and delete out the numbers because if you do, you have to do an extra step. What you would do here, that 456,000, you would type over it. 456,000. Sometimes it's hard typing. So you have 456,000. That 7%, you would type over the 7 and put a 6. You'll go here. That 7, you will make a 6. And then with your exponent, You would type over the 3 with a 1 and that first 0 with a 2. And then now you press enter and it gives you the same thing. Okay. Now, that took care of problem 19. This took care of problem 19. So now we go on to the next page. Now for 20, let's take a look here. All right, let me get a fresh page here. So problem number 20, they ask us, what if a person filing as single has taxable income of $205,788, what tax bracket is she in? What about a married person filing jointly? Matter of fact, I'm going to write this on here. Let me write this down here. Okay, so number 20. If we look here at a married person or a single person, their tax bracket for $205,000 is 33%. So it'd be 33% for a single. And then they ask us for married filing jointly. What is their tax bracket at $205,000? That's the 28%. Married filing jointly. Okay, now with 21, so I'll start over here with 21. All right, with problem 21, it says, consider the stock table. Is this stock more or less volatile than the market as a whole? And then we would say that it's less volatile because the beta is less than 1. As long as that beta is less than 1, it's less volatile than the market. So now, that took care of problem number 21. Now we go here to problem 22. Okay, problem 22. It says Raul's credit card statement showed these transactions during May. Okay, we see these different transactions. This is basically similar to what we did in problem number 10. As they're basically asking us the same thing as we did for problem number 10. So what we would do is first we would start off with the $304.29. That's our starting value. Now it's from May 1st to basically to the 5th, because we know we wouldn't count the 6th because that's when the balance changed. So we'll multiply this by 5, and that would give us $1,521.45. Okay, next. It says we made a payment of $100. So we know we're going to subtract $100 from this $304.29. So it'll be $204.29. And we will go from May 6th to the 10th. Well, basically to the 9th, because we wouldn't count the 10th. So that'll be 4 days from the 6th to the 9th. And when we multiply this, this would be $817.16. Okay, next. It said we made a purchase of $58.10. So we're going to add the $58.10 here. It'll be $262.39. And then that will go from May 10th to the 5th, well, basically to the 14th. So that'll be 5 days. And that would give us $1,311.95. Now we made another payment of $100. So we would subtract 100 from this 262.39. So it'll be 162.39. And we will go from the 15th basically to the 25th, which is 11 days. So that'll give us $1,786.29. Now, we will go to the last value here, which is said we made a purchase of $114.73. We will add that to the 162.39, and that will give us $277.12. And we'll multiply this by, it's from May 26th, we know, to the 31st. So that will be 6 days. And that will give us $1,662.72. Now, when we add all of this together, it'll be $7,099.57. Now, if we want to find our average daily balance, our ADB, we would take the $7,099.57 and divide it by 31 days. Now, when we divide this by 31 days, this would give us $248.37. That's our average daily balance. So that's part one of our answer. Part two of our answer, it tells us that the interest rate is 18% per month. So we need to find the finance charge. The finance charge is your average daily balance, which is $248.37 times the 18%. So your finance charge would be $44.71. That's our second answer. Now we want to find a new balance for June 1st. So we would take this last value. So we could say the new balance. We would take this last value of $277.12, and we would add the $44.71. So our new balance would equal to 300. Wait a minute, let me see. That'll be what, 83 cents, one, carry a one. So it'd be $321.83. That would be your new balance. Did someone have a question? Because I heard it click. Oh. I see the screen froze. So let me pause this. Okay, class, we had a little technical difficulty, but I also found out in doing this that I made a slight error. I don't know exactly where it froze at, but when I got here, when I took the 7,099.57 over 31, this right here is incorrect. This is correct, but I actually wrote down the wrong number here. So let me go back here. It's the average daily balance. So it's $7,099.57 divided by 31. Now, when I put this in the calculator, it actually gave me $229.02. So that is your average daily balance. Now, with that being said, that changes everything. The finance charge will be the $229.02 times the 18%. And that, let's put that in the calculator just to be sure. So it'd be 229. Oh, Put in the wrong one. Okay. 229.02 times 0.18. So that would give us $41.22. So that's the finance charge. Now we want the new balance. The new balance would be the last value, which is $277.12, plus the finance charge, which is $41.22. So this would be 34.81. It'll be $318.34. So that is the final values here. Okay, so now that took care of problem 22. Now we need to move on to problem 23. Problem 23, it says the blank is the interest charge for borrowing the amount financed. So for problem 23, it's the finance charge. So 23 is the finance charge. Okay, now 24. Now I realized this after I did the review. 24, actually we did not cover 24, so you could strike 24 off. That would not be on the exam because we did not cover that. We covered future value, but we did not cover continuously investing $850 each year. So we would just do $850 and then we would just do the interest just on the $850. But this is asking you, what is the answer when you keep adding $850 every year in addition to your interest? And we didn't do that. So now we're going to go to problem 25. It says, what was the lowest price that the stock sold for during the last 52 weeks? So we have 52 weeks. We look at the low. So 25, the low price is $41.07. So that is what 25 is equal to. Now 26, it says find the future value. Now if you notice here, this is compound interest. And they just want us to find the future value. They don't want us just to find the interest. So we do not have to subtract off the principal. So for 26, we have the future value is equal to the principal times 1 plus R over N to the NT power. So with 26, the principal is $900. The rate is 18.5%, which is 0.185. And then the number of times it's compounded, it said quarterly. So we'll divide this by 4 because that'll mean that it compounds 4 times in a year. N is the number of times it compounds. And the time it says here is 2 years. So this future value is 900 times 1 plus 0.185 divided by 4 to the 8th power. So now when you put this in your calculator, your future value would be $1,292.19. Okay, that's problem 26. Now we move on to problem 27. It says if the closing price of a stock is $34.31. Here, let me scroll this up. And the annual earnings per share is 48 cents. Find the price to earnings ratio. So the price to earnings ratio is equal to the current price divided by the annual earnings. So now the current price of this stock, as stated here, was $34.31. And then the annual earnings per share is 48 cents. Now, when we divide this, the price to earnings ratio will be $71.48. Okay, now we come to problem 28. It says find the future value of the loan. Now, if you notice here, it does not have any compounding. So we would assume that this future value is simple interest. So it'd be A is equal to principal times 1 plus RT. So A is equal to, the principal is $14,400 times 1 plus the rate is 0.06 times the time, which is 5. So when we put this in our calculator, this would give us $18,720, because that is the future value. Okay, now we come here to 29. It says the Trissel family agreed on a price of $229,200 for a home. Their company credit union offers a 5.3% 20-year loan with 15% down, resulting in a monthly payment of $1,318.23. Find the down payment amount and the total amount they'll pay for the house. Okay, so now, problem 29. To do the down payment, we would take this $229,200, and then it said we're going to put 15% down. So since we're going to put 15% down, that means that we will multiply this by the 15%, because we want to actually know what our down payment was. So our down payment is $34,380. That's our down payment. Now we want to know also the total amount that we would pay for the house. So we would say the total amount will be equal to this. It'll be the down payment, which is a $34,380, plus the payments we made. We're told that our monthly payment is $1,318.23, and it's a 20-year loan, so that's times 24 months, because it'll be 24 payments. 20 years times 12 payments a year, that's 240 payments. And when you multiply everything together here and add, you would end up with a total amount of $350,755.20. So that is the total amount that you would pay for the house. Now remember, the house originally was $229,000, and you end up paying like an extra, close to an extra $130,000 for that home. All right. Well, actually an extra 120,000. Okay, now we go here to problem 30. It says, if you purchase 2,318 shares of stock at the closing price and the broker's commission is 3.5%, find the total cost of your purchase. All right, so this is what we would do with problem 30. We would take how many shares we bought and multiply by the price. Now, they said we bought it at the closing price. The closing price is $59.86, which we see here. So we will multiply these values, and this would give us $138,755.48. Now, they asked us, they did not want us just to get the broker's commission. They want us to get the commission and provide the total cost. So we need to find out the broker's commission. So we will multiply this value by 0.035, because it's 3.5%. So we would take our calculator we'll take 138,700. Let's see. I forgot I got to click down here. So it's $138,755.48 times 0.035. So that would mean that the broker's commission is $4,856.44. Now to find out what the total cost is, the total cost will be the broker's commission plus the amount we paid, which is the $138,755.48. Now, when we add all this together, it'll be $143,611.92. That would be our total cost. All right. So that's problem 30. Problem 31. It says find the simple interest on a loan of $500 for 2 years at a rate of 5% per year. So we will have interest is equal to principal times rate times time, because it was supposed to be simple interest. So the principal is $500. The rate of interest is 0.05, which is 5%, and the time is 2 years. Now, when we multiply all of this out, it will give us $50. Okay, now we go to problem 32. It says for the month of January, Christina has an unpaid balance of $539.50 from December. Purchases for the month were $275.46, and a payment of $350 was made during the month. If the interest on the unpaid balance is 2% per month, find the finance charge and the balance on February 1st. Okay, so this is what we would need to do. So we would take the $539.50 from the previous month and multiply by the 2%. Put that in our calculator. So we would have $539.50 times 0.02. And that would give us $10.79. So we do have that finance charge at $10.79. Okay, now we need to look at what our balance is going to be besides this finance charge. So watch what happens here. We start off with $539.50. But we're told here that we made a purchase of $275.46. So we'll put that in our calculator. So we will have to add that plus 275.46. So that would give us $814.96. And then we made a payment of $350. So we would have to subtract $350 from this value as well. So that'll give us $464.96. Okay. So now we have to add this finance charge here, which was $10.79. And when we add this will give us $475.75. So this will be the finance charge and then the amount that will be on there February 1st. All right. 33. It says find the future value of $40,000 of a $40,000 investment with 9.2% interest compounded continuously 24 years after it started. So we have to do the future value of compounding continuously, which is P times E to the RT. Now, our principal value here, we're told, was $40,000. Our E will remain E. The rate would be 0.092. And then that would be times the time, which would be 24 years. Now, when we put this in our calculator, our future value would be $363,900.13. Now, before I go on, does everyone know how to get the E in whatever calculator they're using? If there's anyone that does not, please let me know so I can show you how to get the E. Okay, everybody knows it. Okay, so let's go to problem 34. It says an investor purchased 700 shares of stock at $50.92 per share. She later sold it at $50.18. The broker's commission on the purchase was 3% and 1% on the sale. Find the amount of money the investor lost on the stock. Okay, now, the first thing, we would take our 700 shares and multiply it by the $50.92. So 700 times $50.92 will give you $35,644. Okay, that's how much was spent. But now we have to do the commission. Okay, so now we'll multiply this by 0.03. We could take our calculator. So we will have 35,644 times 0.03, which will give us $1,069.32. Okay, now we have to take the amount that was paid for the stock and add this $1,069.32. So this will give us $36,713.32. I'll just rewrite that. So this is the amount that we actually paid when we got the stock. Okay, now, it was said here that this young lady took the 700 shares and sold it at $50.18. So she suffered a loss. So her return was $35,126. But here's the problem. Remember, it said in the directions, it says here that she also had to pay 1% on the sale. So this was the sale. This would be 100% of the sale. But if she has to pay 1% on the sale, that means that she only kept 99%. She didn't keep the full sale. So we multiply this by 0.99. This would be $34,774.74. So this is how much money she had left after she sold it. So let's take a look at what she paid, which is $36,713.32, minus what she received back once she sold it. And her total loss ended up being $1,938.58. That's how much money was lost. So that was her loss. Okay, now, 35. It says Max borrows $14,500 for her last 2 years of college, acquiring a federal student loan at 7.2% interest. Find the amount of interest accrues if she acquires the loan in August, graduates 2 years later, and payments begin 3 months later. Okay, so this is the thing here. It tells us for problem 35 that she graduated in 2 years, but payments doesn't start until 3 months later. So basically her payments will start after 2 years and 3 months. It tells us here that she acquired the loan in August. So 2 years from August would be another August. So we have to deal with the 3 months past that August, which would be September, October, and November. Okay, so now we have to deal with how many days are in each of these months. It's 30 days in September, 31 in October, and 30 days in November. Now, what we have to do, because we have to find out how much interest is charged for these months. We know that we can use a simple interest formula to basically find how much interest we would pay in 2 years. Okay, so this is what we would do. We would take the simple interest formula. I'm going to go off to the side here and just do it according to 1 year. So the principal here was $14,500. The rate was 7.2%, which is 0.072. And the time, we're going to do it for 1 year. So the interest here would be $1,044. Now, the reason why we're doing it for 1 year is so that we could find out these values here. So what we would end up doing, we would take each of these days a month, and we would take $1,044, which is the interest for 1 year, divided by that 365.25 that we determined earlier on. We determined this back in problem. Let's see, what problem was that? I always like for us to go back. Oh, if you go back to problem number 4 on the first page, it shows us that on problem number 4, that it is the principal balance times the interest rate divided by 365.25 days. So this is what we have for the 365.25 days. So this is the principal amount times the interest rate. So we really didn't need the time, but that's fine. So we have 1,044 over 365.25. So we'll multiply each one of these by the 1,044 over 365.25. So for the 30 days, let's put that in the calculator. So we will have 30 times, now I'll put a parenthesis, 1,044 divided by 365.25. So this will give us $85.75. So, you know, September and November will have the same amount because both are 30 days. So now all we have to do now is find October. We could just change this 30 to 31, and then we will have October, which is $88.61. So now that we have these values, this is what we need to do next. We're going to have to take the simple interest, which is the interest is equal to principal times rate times time, plus all of these values for the 3 months, the $85.75, the $88.61, and the $85.75. Now, the principal was $14,500. The rate is 0.072, and the time we'll just do the 2 years because the 3 months we calculated here. So it'd be plus the 85.75, the 88.61, and the 85.75. Now, when we put this in our calculator and add everything up, The interest that will accrue is $2,348.11. And that is the final answer. Now, we are done with the review here. So if you have any questions, feel free to ask. If you don't have any more questions, you all can study and prepare for your exam. And remember, on Wednesday, we're going to start section 4.1. So are there any questions? Okay. All right, we'll see you all later. I will have the session up until the end of class, so feel free to ask any questions if you have them. Yes, Mr. Wilson, the last question was a doozy, but it's doable. It's doable.